Happy Sunday.
Happy Sunday, bull runners. Hope you guys are having a great day today. So we're looking at the charts right now on XRP. And in this video, I'm going to be getting into what's happening right now in the markets, what's happening with Ripple teaming up with Super How, and what's happening with the Fed, what's happening over in Europe. And then we're also getting into the Bitcoin price chart comparing to the past on why XRP hasn't broken out yet. So the title of this video, hold the line. This line right here of support of roughly 71 cents, XRP wicked off of, and this falling wedge formation right here. If XRP doesn't hold this line, I'm going to explain what could happen next in this video. We're going to talk about price projections for the future in the next few months and what's most likely to happen. And what the Fed is about to do is going to be unthinkable. They're going to be doing it again, and you guys are going to see what that is. So comment 777 if you're feeling blessed, if you're feeling bullish, if you're going to become the first millionaire in your family tree. You know what to do. Confirm it by subscribing to the channel. You know, the markets aren't doing too much right now. You know, volatility that's taking place, especially with XRP, you know, coming to the backs of Bitcoin is based on, you know, what the Fed is talking about doing with their CME Fed Watch tool, the FOMC meeting coming up in the next 2 days, 17 hours. And there's a 99.8% expectation of another rate hike. And as you guys see, we could sort based on September. Has an 84.9% expectation of a rate hike, and 15% are expecting 50 to 75 basis points. Only 0.2% are expecting them to hold the line. Up in November, we go to November right here, we can see 70% are expecting another rate hike. So for the rest of this year, the Fed is going to be raising rates. Now, that's not necessarily bad news for the crypto market, but leading up into the FOMC meetings, it does create some volatility in the markets. And so with XRP's breakout, you know, upwards of almost $1.94 right here, this consolidation period, XRP needs to hold 71 cents. Otherwise, the last line of support for XRP before falling back down to right about 56 cents is the next line of support beneath the support that it wicked at when it corrected down to 66 cents. So if it doesn't hold 71, 66 cents is the next stop. Then right after that is 56 cents. Now, ultimately, a lot of negative, pessimistic people were coming to the channel and we're hating on XRP, which is normal. We're all used to that. So for those of you guys that have been holding XRP for a long period of time, you know, for the people that are calling it a crap cryptocurrency and, you know, a junk project or whatever, I mean, that's cool. I don't really look at these projects and have favoritism one way or another. I look at the facts behind the scenes of what they're doing from a utility standpoint, development standpoint. That's what I'm looking at. So with all the trolls crawling out from under the bridge, crawling out from the basement, you know, hating on a project like XRP, that's completely normal. We're used to that. And when you look at something like Bitcoin being regulated by the CFTC and that XRP being the only other, you know, altcoin that has clarity, it says a lot about this industry on why people are more bullish on XRP than ever before. And even if the SEC appealed, Ripple would most likely win again, is saying pro XRP lawyer John Deaton. Now, he does have a bias, but the 4 factors of the Howey test include number 1, an investment of money, number 2, in a common enterprise, number 3, the expectation of profit, number 4, derived from the efforts of others. So any asset that checks all 4 boxes would be classified as a security based on the Howey test. And Judge Torres ruled that the retail sale of XRP did not meet the 3rd factor of the Howey test because retail investors did not have a reasonable expectation of profit tied to Ripple's success as a company, because what Ripple was doing as a company wasn't necessarily affecting XRP, it was affecting Ripple. XRP was affected by the liquidity flowing into cryptocurrencies as a whole during the bull run. So when money came to Ripple, it didn't really affect the price of XRP. And in the Second Circuit found by Judge Torres, application of the 3rd prong of the Howey test, if it to be wrong, Judge Torres would likely assess the remaining 2 factors of the Howey test, Deaton said. Now, in that case, Judge Torres could rule the exact same way as the first time after finding that the SEC did not satisfy the common enterprise factor, he added. It is important to clarify that the Torres decision is not binding beyond the Southern District of New York, where while a fellow district judge within the Southern District of New York could potentially disagree with Torres, Deaton argues that such dissent would be likely within the Second Circuit, especially considering her citation of Judge Castell's ruling from the Telegram case. And Deaton further pointed to the Coinbase transcript as evidence that events seem to align with Judge Torres' perspective. He suggests that there is already a consensus trend within the Second Court indicating potential alignment of views with Torres' decision. So to put it simply, they would most likely win and it would take years before anything would happen. So don't let that deter you from, if you're holding XRP. And again, don't buy, don't sell XRP. It's not financial advice. You're a full-grown, educated crypto degenerate. You can make up your own mind. You're very intelligent. I don't have to insult your intelligence. You already, are brilliant by betting the family farm on whatever you want to do, man. Ripple teams up with a research and development firm to run the CBDC and crypto experiment. So what is happening right here? Obviously, I'm joking when I say bet the family farm on a project. You know, smart investors understand that, right? When you're diversifying different industries, you got a good amount of precious metals, good amount of gold, good amount of silver. You got some real estate if you can afford it right now without having to take out too many crazy loans. You can get into, you know, crypto. You hold different projects for yourself. I personally am not holding any stocks right now, for those of you wondering. And I explained why in a previous video. If you haven't watched that video, the Dow to gold ratio and the Dow to silver ratio, it's a 100-year historical chart. I can break that down for you in another video again, but it shows why it's more bullish to be holding gold and silver than being in the Dow. Now, Ripple, let's getting back to this, is teaming up with a Northern Europe-based research and development firm to run experiments centered around crypto assets and central banking digital currencies. So in a new company blog post, Ripple says it will be collaborating with SuperHow as a tokenized securities and settlement infrastructure built on top of XRP Ledger. And that's through Latvia to work with Axology project is what it's called. And so the collaboration serves as a catalyst for testing and issuing digital assets, including CBDCs and stablecoins, to bolster regulations and the confidence and safety and securities of these transformative assets. Now, according to Ripple, the point of the partnership is so that regulators can test the security and safety of crypto assets. So there's still the fact that this is happening. I'm going to share what's happening with the Fed with their recent job report. They're still far off from CBDCs being implemented. So there's still a lot of time. And when I show you on Bitcoin's chart, it shows you how far off we are from this bull run really taking place. So you guys are early. That's why it's imperative and it's more important than ever before for you to get your cash flow right on the front end through a business model and a skill set that's going to help you generate cash flow so you can be able to accumulate as much as possible of the assets and of the productive assets as you choose. Now, within Europe, this is on Ripple's Insights that they just posted a few days ago. Within Europe, a series of initiatives are underway to actively address the challenges posed by fraud and anti-money laundering while simultaneously leveraging the exciting potential of blockchain-based systems in line with their recently introduced markets and crypto assets regulation. In MiCA, this is massive that they're doing over there. The European Commission has unveiled their comprehensive digital financial package and strategically designed to mitigate the risks associated with money laundering, security breaches. This transformative package not only encourages the adoption of crypto and CBDCs for financial innovation, but also prioritizes the acceleration of cross-border payments and settlement times. A key component of this groundbreaking EU financial package is the proposed distributed ledger technology pilot regime. And so the EU DLT pilot regime, they're calling it, in an effort to cater to market infrastructures engaged in trading and settling transactions involving digital assets, the EU Commission has introduced an innovative pilot regime. This revolutionary approach establishes a controlled environment akin to a sandbox, they're calling it, and providing temporary exemptions from existing rules by granting regulators the opportunity to gain hands-on experience with distributed ledger technology within certain market infrastructures. And the DLT regime aims to ensure robust investor protection, safeguard market integrity, fortified financial stability. Additionally, this initiative empowers companies to test and refine existing rules through practical implementation. So even though, and I like reading this stuff so you guys can gain the full point of this here and then give my take on it, because even if FedNow and the Fed takes a long time before they start, ushering in their payment processor and their payment system, the FedNow is not a CBDC. It's a payment processor and it's a payment system for instant payments. And that could be a big issue for credit card companies because there's a lot of fees that credit card companies make. And so if the Fed is like cutting out the middleman, they cut out the smaller regional banks, they cut out the credit card processors and stuff. And we'll see how that plays a role into the fees moving forward. But even if they take a while to, put that technology into place, and Ripple being partnered not directly with the Fed, but having indirect partnerships with like Volante, Finastra, and all these other companies as well too. Well, if Ripple, doesn't make waves through those announcements there as the Fed expands that to more banks, well, they have Europe, they have over in Dubai, they have the Middle East, they have other countries that are starting to adopt the distributed ledger technology that Ripple has. And so building upon this foundation laid by the EU's proactive initiatives, Ripple and SuperHow have embarked on their ambitious collaboration known as Axology, the Axology project. And this collaboration serves as the catalyst for testing and issuing digital assets, right? So SuperHow is a private blockchain technology research lab based in Lithuania, bringing its expertise to cutting-edge projects involving central banking digital currencies, and Axology is a tokenized securities trading and settlement system infrastructure. So this infrastructure enables multiple layers of the current capital market infrastructures to coexist on one technology layer, leading to multiple synergies, process inefficiencies, and new business models. This collaboration aligns with Ripple's commitment to driving innovation, advancing the adoption of blockchain technology in the financial industry. And so, in the financial industry, the waves that are taking place right now and what everyone's talking about is obviously, Fed now, they're talking about the EU, they're talking about the meeting coming up next month for the BRICS nations, but the talks about the commodity-backed currency is being pushed off for future meetings, and they're not going to be mentioning that next month, whereas the Federal Reserve over here is hiring crypto architect for a CBDC project. And so by at least February, by at least since February, when it was looking for a software engineer to help develop and implement systems related to CBD initiative, they posted this on July 19th. It's been up for about a month. And so if you guys, want to work for the Fed, by all means, you can go check that out. It's on their official website if you want to take that look. But in a recent event, presidential candidate and Florida Governor Ron DeSantis, he vowed to ban CBDCs in the United States if elected president. If I am the president, on day one, we will nix central banking digital currencies. Done. Dead. Not happening in this country, he said during the Family Leadership Summit in Iowa. And so, with people being unfavorable for CBDCs, obviously gives them more control. That's what they want, right? Nobody wants them watching all of your transactions. And, the Bank of International Settlements, the head of it, he said that the CBDC technology through distributed ledger technology, they will have the technology and the enforcement capabilities through that technology to track and monitor all of your payments and know where you're spending your money because they don't like cash. And so that's going to be good and it's going to be bad moving forward. So you just have to be prepared for that. But either way, you're going to be backing up the truck and getting wealthy. Look at Bitcoin right here. When we look at the past for Bitcoin, this current bull run cycle is being compared to what happened from the 2015 to 2017 bull run cycle. Not necessarily as similar as 2019, but if we compare this to 2015 right here, when we saw Bitcoin break out from a low of about $155, it took about 200 plus days, around 205 days, give or take a day or two if I were to zoom in there, 205 days before it broke out. And then it had to backtest. It came out and backtest this breakout line of roughly $450 of resistance right here. So 205 days before it broke that resistance, and you saw it test it multiple times. It was support on the left-hand side of the screen that you guys can see right here. It kind of bounced off support, wicked below it several times back in March to May of 2014, wicked off it again in August of 2014, broke below it, came back up to test it as resistance, and then just rode alongside it for 205 days. Now for Bitcoin, we can see something very, very similar happening for the complacency stage. So if you guys look at the psychology of a market cycle, and I'll just bring this up on Google with you right now so you can see this. So you go psychology, and we've showed this so many times to understand where we are in this market cycle right here, because when you see these phases take place, right, euphoria, thrill, or thrill, euphoria, complacency, anxiety, denial, panic, capitulation. So euphoria is when the markets are just straight vertical, like the peak of Everest, and you see right here is euphoria. This is euphoria right here at the top, right? People think it's just going to keep going up. Bitcoin going from $200 to $1,000 in a matter of days. That's not something that can be sustained because it's drastically above, the 200 moving average and the 50 moving average. As it just keeps going up and up and up and up, eventually smart investors, right, are buying down here and idiots are buying up here, and then they're selling down here. So what's happening down here? We'll look into the psychology of market cycle. Complacency, it's just profit taking. Those sellers will regret letting go, right? Diamond hands. So this is complacency right here. This is complacency on this stage right here. Complacency also was the actual all-time high for Bitcoin because this was a double top. And this was actually the dead cat bounce. So in terms of an ABC corrective wave, if we look at it on the right-hand side of the screen, this is wave A, this is wave B, and then the C corrective wave is the bottom. So the B corrective wave can be higher than the high. So if we were to draw that from the high, and then on the left-hand side of the screen, if we were to see the A wave right here, the B wave right here, and then the C corrective wave down here, the B wave, the dead cat bounce is actually lower than the high. So that's really what happened. People were expecting the complacency stage right here to keep going higher. And the emotions at that time, I remember specifically, everyone was thinking it's just profit taking. Those sellers will regret letting go. Well, I sold around this stage about 80% of my Bitcoin and my portfolio. Now, XRP, I was just holding some XRP, but in terms of my portfolio, right, I knew, and I could have been wrong there, but in that moment, my gut and my logic was telling me that that was going to be the top and we were going to go down from there because of this, head and shoulders pattern right here, where you can see this downward trending support as well too. And when Celsius happened and you saw Terra Luna and then you saw FTX take place, I mean, that was just the nail in the coffin. And then, that signaled that regulation needs to come into this industry. And so when we saw anxiety, denial, panic, that was Celsius, that was Luna, that was FTX. Anxiety, maybe I shouldn't have margined, but this is a good company. The PE is just, how do I hide from this from my wife? How do I hide this from my wife? That's what everyone's thinking. Oh shoot, I just lost the mortgage, right? Panic, crap, I need to sell some. Damn, the margin check. Capitulation, F it, the market is rigged. Never again. Anger, where can I sue? This clearly isn't my fault, right? No one taking accountability for their own bad investment decisions of YOLOing in, the retirement fund. Depression, can't believe my boat, what does this say? Can't believe my boat, I sold my boat or something like that. Did you guys sell your boat? I mean, hopefully that wasn't you. I don't know. Maybe you shouldn't have even bought a boat in the first place. They say the best day of a boater's life is the day you buy the thing and the day you sell it. So, and then we go back into disbelief, the disbelief rally. I can't believe my boat got repoed. Is McDonald's hiring? Okay, that's depression. So we went through that stage and we were down here in the gutter back in 2000. Were you guys in 2015? Were you guys in this Bitcoin during this stage? I got into Bitcoin right around 2016, 2017, when Bitcoin was right around here. This is when I started to get into Bitcoin, started learning about Bitcoin. It was around $600 right around that stage. So 2016 to 2017. So I missed the $200 bottom. If I would have heard about Bitcoin during the stage, that would have been the best time frame, right? Just like down here when Bitcoin was at $15,000. I bought Bitcoin at $16,500. So I bought Bitcoin again down here because I was around during the bull market cycle of 2017 where we saw the other bull off top, right? You see the complacency. You see these things happen every single market cycle. And so you guys are getting game here, right? This is euphoria. This is complacency, the dead cat bounce. You see the A, B, C corrective waves, right? A wave, B wave, and then C corrective wave all the way down. It's about 365 days, roughly, give or take 1 to 3 months from top to bottom. So it takes about a year to go from top to bottom. And then to break out from that level all the way back down here, it took 205 days. So where are we right now? We're about 103 days from breaking this market structure line. Now, in the past, we're about 200 plus days. So could this be another 100 days? Well, coincidentally enough, I'm curious on your guys' thoughts here. The SEC has roughly 45 days to 200 days before they're going to give us news on the BlackRock Bitcoin ETF, spot Bitcoin ETF. And if you watched my video yesterday where I talked about, or the day before, whenever I shot that one, within the past 24 to 48 hours, where I talked about when the first gold ETF was filed, gold went on this massive bull run. So could we see something like this happen for Bitcoin where it just consolidates sideways for an extended period of time? Maybe it comes down to test this 200 moving average. That's what I would expect. So if Bitcoin breaks below the 50 moving average, it could come back down to the 4-year moving average and the 200 moving average of roughly $27,500 to $27,000. And we would need to see a bounce for Bitcoin if it broke to the downside to stay within this ascending triangle and then break this structure of roughly $31,500. And then we could see a back test. That's what happened back in 2016 right here, where Bitcoin took 205 days to break out. Once Bitcoin finally broke out, it went from $458 upwards of $700 really, really quick. And it broke through the resistance that was the dead cat bounce. And so if we were to see something like that happen for Bitcoin, well, a massive resistance to the upside would be like $48,000, even to the all-time high. So Bitcoin could push upwards of $48,000, $49,000, and then we could see something potentially happen like this, where it would correct back down, retest the breakout line, which would be massive bullish news and another great entry point for a lot of traders. Again, I'm not telling you to buy, but how long would it take? For example, when Bitcoin broke out, how long did it take before it passed that again? Well, it took another 160 plus days, 170 days. So 30, 60, 90, 120. 30, 40, 50. So 5 to 6 months. It took about 5 to 6 months again for Bitcoin to break out from that $700 range and then going on another bull run. And then you see these massive, rallies followed by 20 to 40% corrections. I mean, that correction, if I were to measure this for you guys, this correction from $700, nearly $800 all the way down was a 40% correction, right? 40%. You see 20, 30%, 40% corrections all the way up to the previous high of $19,000, almost $20,000 in December of 2017. And how long did that take? Well, let's measure that out. So patience is obviously a virtue here, but right when Bitcoin, tested this market structure line right here and it hit the all-time high, it was about 773 days. And so when did Bitcoin test this market structure line? Well, it happened in April of 2023. So if we were to measure 773 days, where would that bring the top? Well, that would bring the top roughly between October and December. Like, that's why I say give it like 1 to 3 months, within a range. 1 to 3 months for the high. I'm projecting October to December of 2025. And, there's going to be great accumulation periods for you guys along that way. But anything right now below $31,000 is a steal in the macro because of Bitcoin's stock to flow model. And so if we pull that up right here, and you can see the days until the next halving for Bitcoin in terms of where we are, well, we are drastically below the stock to flow line. The stock to flow line is $114,000 right now. So we could realistically see a rally up to this line similar to what we saw in the past. And then by the time we go from, dark green to blue, getting close to 0 days until the next halving, once Bitcoin halves, historically, that's when we turn from blue to red. That's when we go into the bull market rally. And then from red to orange to yellow, we see these massive, massive rallies. So right here, you guys saw from 2012 when Bitcoin was $11 and then it went to orange, it went up to $150. So, for Bitcoin to rally up, what would that cause for XRP? The reason why I talk about Bitcoin, when people are like, enough talking about Bitcoin on this channel, well, you need to know what's happening with Bitcoin, because if you don't know what's happening with Bitcoin, then where's the liquidity going to come from for XRP? Yes, money could flow just directly into XRP, and it could be the, main cryptocurrency that's used for, and that's what it's lining up to be with Ripple's distributed ledger technology for cross-border payments. Fed is within the United States. So there was some confusion on previous videos where people thought that Fed was global. No, it's in the United States, but Ripple's technology is for global payments. And so Ripple using the XRP ledger and XRP for cross-border payments, yeah, liquidity could flow into XRP. That's why it's my largest altcoin holding, but liquidity needs to flow into this whole entire industry, man. So when you look at a market cap right up here, okay, let me just point to it right here. This is where I'm looking right there, $1.2 trillion market cap. Well, this market cap is very, very small compared to gold. Look at just gold right here. Market cap of gold. Let's get this live right here. $12 trillion market cap for gold. So gold is 10 to 13x if you were to multiple that of the entire industry. And so blockchain technology is the future. Massive venture capitalists, massive institutions, massive government entities and banks are going to be pouring money into crypto as soon as BlackRock's ETF. BlackRock virtually owns the world. They control the media. They have, how much does, look at this. You can look at this stuff. Take a look, give it a little lookaroo, okay? How much does BlackRock manage? How much money? And not only just money, but how much control do they have over media companies? The media is what drives the crypto fear and greed index, right? Because it'll either sway to extreme greed or fear or somewhere in between. And the moment we go to extreme greed, then be careful. Once we're in extreme fear, that's when the whales are accumulating. So BlackRock manages about 8.59 trillion. And this number right here is most likely higher than this, because if you're going to Google somebody's net worth, of course, Google's not going to know the answer for that. And so it's very apparent that it's most likely higher than this. And they control the media companies. And when you see the fake news reports of all the news companies saying the same thing at the same time, who's responsible for that? Who's responsible for that? I think it's very obvious. So with BlackRock filing for a spot Bitcoin ETF, what do they want? They want control of the market share. They want institutional people that are used to holding 401ks, pensions, and the retirement funds, putting money in the stock market, to start giving money to them to manage. And what are they going to do with that? They're going to dump it into Bitcoin. So when money gets dumped into Bitcoin, where do you think the rest of the money is going to get dumped into, right? We go to CoinMarketCap, you go to categories right here, and here's what's interesting. Look at the market cap, the top market cap right now. Arlington XRP Capital Portfolio. Interesting, right? How the number one category is a capital portfolio company with XRP in the title. The next one is Huobi Capital Portfolio, Frameworks Ventures Capital Portfolio, Winklevoss Capital Portfolio. So before we finally even start getting into the actual categories of like layer one, smart contracts, metaverse projects, play to earn gaming, the stable coins, etc., right? You see portfolio. So institutions. This is a whales game right here. This is not a retail game. XRP is not going to be driven by retail investors. As I mentioned in my last video, about 1% of XRP's price is affected by retail investors. And you know that if retail's most likely not going to dump on the markets, because retails are the bag holders, the diamond hands holders that are just holding XRP for a long period of time, right? Especially with Bitcoin. Long-term holders of Bitcoin are outpacing short-term holders because they just keep accumulating more and more and more. So leading up to halving, Bitcoin has to grow in value. And so when Bitcoin has to grow in value, unless this is the biggest psyop in history and the biggest social experiment of all time, which could very well be, and it could be a war weapon by China, maybe similar to TikTok. I don't know, man. But hey, you know what? If it is, then it's a fun run nonetheless. And hey, we're all going to be working at Walmart, if it is. So, or McDonald's. No hate for those working at McDonald's. I used to scrub dishes at a hospital for $7.50 an hour, but the signs are too obvious that things are shifting to blockchain. Cross-border payments are needed. The SWIFT system's outdated. ACH transfers are old. Basically, everything that grows on this planet, whether you believe in evolution or you believe in creation or you believe in a combination of both, it's very obvious that we expand as a species. It's very obvious that our cells divide. So because our cells divide, when you look at the planet on a macro scale, everything keeps evolving and keeps expanding and the vibration keeps going up. And so for payments have to evolve naturally, right? So payments have to go from the barter system of I give you meat, you give me bread, right? Or I give you gun, you give me fur, right? Going from that to then, okay, well, I give you gold, you give me meat. Okay, well, gold's too heavy to carry around. What am I going to give you? I'm going to give you an IOU and that's backed by gold, and then you give me meat. Oh, well, now the IOU is no longer backed by gold. What's it backed off of? Petroleum. And it can only be backed by that for so long until the BRICS nations take over that. And then the United States, what's going to happen to the dollar? It's going to come flooding back onto the U.S. shores. Inflation's going to spike through the roof. And then what's the Fed going to do? Is the Fed going to print more money? They're going to put more money in the system like they always do. They're going to raise the debt ceiling. Well, they suspended the debt ceiling. Very interestingly enough, they suspended the debt ceiling until after the election period, because that if there's a recession, while a politician is in office, the likelihood of them getting reelected is virtually zero. It decreases their likelihood. So of course they're going to push it off. They're going to push it on to the next, the next president. And what do? They just keep pushing it off. So by default, they either have to print more money, they have to put more money in the circulation, or everything comes crumbling down like a house of cards. And at some point it will, right? At some point it's going to crumble down. The whole market, something crazy is going to happen at some point, because I don't know how they can just keep printing money. There needs to be a great reset where you will own nothing and you will be happy. And that's what they're planning right now. They're CBDCs. That's why a lot of people don't like CBDCs, because when that happens, well, universal basic income, that's what Elon Musk is predicting, especially with artificial intelligence coming into play, making certain jobs obsolete. Because why would a company pay employees that need to take naps, that need to eat food, that need to take a crap, that need to go pee, that call in sick, but they're not actually sick because they want to go on a 7-day bender, in Ibiza with their friends, or they want to travel the world, right? They want to do stuff, when a robot is just going to sit there and work all day, is going to take orders, and it doesn't even need any pay. So it's obvious that companies are going to start firing a lot of people, and they're going to start using AI and start using robots moving forward. So universal basic income, it kind of has to lead to that. So because universal basic income for most jobs is the end outcome for this, and CBDCs and all that stuff, you have to get wealthy now. You have to focus now. You have to operate and you have to move as if it's going to happen tomorrow. You're going to lose your job tomorrow. Things are going to happen tomorrow, right? The economy is going to implode tomorrow. You have to be operating that way. And, when you think that way, obviously the most important thing is just getting right with God and like having your water filtration system and your food stocked up. So I'm not saying like you need to go to your backyard right now with a shovel and start digging a bunker, and start filling it with cans of tuna and be that guy at the grocery store, checking out with 10 packs of, Bounty quicker picker up or toilet paper rolls over here. You don't need to be that guy or that gal, right? But you need to move with a sense of urgency that the economy is going down, the dollar is going down, and crypto is about to go into the biggest bull run of all time.